Alright, hello and welcome to Camel Finance. I'm your boy Camel and things are heating up and things are heating up quickly. So let's get straight into it. Look, first of all, Spain's largest bank, Santander, has said that Bitcoin's Lightning Network supports millions of transactions per second. Are we about to see this thing be completely embraced and adopted by the large and traditional financial institutions? We had the launch of EDX markets. So this is the one that was launched by the likes of Charles Schwab, Citadel, and Fidelity. So it certainly seems like we are moving towards the chasm. We're about to cross the chasm into mainstream institutional adoption. We have yet another spot Bitcoin ETF filing, and this is my favorite one so far. So Valkyrie has launched it with the ticker symbol BRR, B-R-R-R. How great is that? And of course, this is a nod to Money Printer Go Burr. And as I often say on this channel, Bitcoin is indeed the exit, and these guys can clearly see that right here. As of yesterday, we got back above 30k for Bitcoin, and MicroStrategy is back to break even on their investment of 140,000 Bitcoin. And so Bitcoin has risen from the ashes yet again. But what does the Bitcoin risk signal and RSI tell us? The risk signal is back into the lower zone, which denotes elevated risk. The RSI signal has rapidly shifted from gloom to euphoria, so we should be exercising caution here. If I zoom in on this risk signal, you can see high risk in red at the top, and whenever we have elevated levels of risk, that usually coincides with the bottoms for Bitcoin. Following this major pump, which undid 2 to 3 months of decline for Bitcoin in just 2 to 3 days, you can see we're back to moderate risk for the near term. So I think pullbacks can be bought, I think dips are buyable, but aping in here, FOMOing in after a massive pump, not necessarily the best strategy. So there's still a lot of debate out there. Is this a bear market rally or a new bull market? The bear market rallies generally do not retrace more than half of their preceding declines. The S&P 500 cap weighted index has retraced 64% of last year's decline, which has exceeded all prior bear market rallies since the 1920s. So technically speaking, from a purely historical perspective, it's difficult to call this a bear market rally. We continue to see liquidity improve. Liquidity is the flow of cash and cash-like assets that potentiate economic and market activity. You can see here on the liquidity monitor, the conditions are improving. So there's always a battle between private sector liquidity and public sector liquidity, but the net effect again remains that liquidity is improving. A large portion of this liquidity injection is coming from money market funds, and money markets receive inflows primarily from households and corporates, but over the last year corporate activity has declined. However, this was largely offset by increased consumer savings. This has allowed money markets to see significant inflows. But where we are today is despite quantitative tightening, i.e. removing liquidity from the market, we have also seen significant improvement in reserve balances held at the Federal Reserve. So there's still large amounts of cash on the sidelines ready to come into the system. Ultimately, liquidity dynamics have improved, and the worst of the public sector liquidity drain is likely behind us. We have to keep an open mind to decline in private sector liquidity in the future. However, that has not showed up just yet. These conditions in the immediate term are a boost to risk assets, but a slowing of private sector liquidity will be an eventual drag on risk assets. For the time being, nominal income denominates, and it is not a tide to swim against. Again, this continues to be a story of liquidity. All the while liquidity is still being injected into the system, it's reasonable to expect risk to do well. However, with all that said, in the near term, retail traders are, as you can see, searching for bull market in record numbers. So is it time to start to back off the gas a little bit? Is it time to start to lock in profits? I think so, particularly given where the cycles are for the stock market. I posted this yesterday. I said, look, a NASDAQ close below the blue line and I'll take the profit and wait on the sidelines. And that's exactly what we got. So we'll kick off the technical analysis section of this video by saying that this position is closed, so we don't need this anymore. This has been an absolutely monstrous trade. What I'm looking for now is some kind of correction. In fact, let me show you with a fractal. So if I grab this here, just as a guideline, we could be expecting anything from something like this, right? Or it could be less severe than that, or something like this perhaps. As you can see, any one of these pullbacks would be perfectly logical into the upward sloping yellow or red support lines. So I expect to see some level of correction here. How far down it goes is anybody's guess, but I would think that we are going to get a significant move. If I extend this red line out, you can see from top to the red line is over 11%. So that is not a drop that I want to be sitting through, to be honest. I would much rather go back to neutral here. We know the cycles are getting stretched, and like I just showed you with the fractal, it's perfectly reasonable to expect either a bounce off of this yellow or even a deeper correction into the red before we can go again. I do believe by the end of the month we will get the completion of this pullback and be looking to add another long, and the plan for that will be to draw some sort of diagonal trend line across here and buy the breakout. So expect me to go long, but we're taking the profit, we're sitting on the sides because this market to me seems a little bit overstretched, and we have our first warning signal. So all the while we're above the red, then we are still perfectly maintaining a bullish structure. If we can maintain above the yellow trend line, then we can certainly say that this is even more bullish and expect bigger numbers to come in the not too distant future. But for now, like I said, we'll take the profit. This was a monster trade, so more than happy with that, and we'll look for an entry towards the end of the month. The S&P 500 looks to me like the cycle has topped, looks to me like we're going to come in and try and find a daily cycle low at the end of the month. So we've got two potential strategies. Either we can set some sort of diagonal trend line and wait for a break and go again, or hopefully what we can get is a two drives pattern. So I've shown you this, I show you this every single time we get to a daily cycle low. But if you haven't seen it before, two drives pattern, we come down, we get a counter trend bounce, then we come down, and the key thing is we undercut the initial low, make a swing low, and that right there we will count as the daily cycle low. So it'll probably look something like this, two drives down, right, and then come out. So that's what we're looking for, that's what we're hoping for. They don't always set up this clean. Sometimes they'll just blast straight down and then come straight out there, out of that cycle low. So we'll take the market depending on what it's willing to give us. I do think likely we've got a top in play here, and we should be sat on the sidelines waiting for this. Now, as I've shown you, I've taken off the Nasdaq position. I'm more than happy to continue to push the S&P 500. So I'm not going to take the profit here. I'm just going to wait for this daily cycle low to show up, and then we'll add and we'll move the stops up to wherever that low forms. Dow Jones, you can't really see what's going on, but if I get rid of this, you can see that we are doing pretty much as expected for the stock market. So the stock market is completely obeying its cycles for now. I do think we get this decline in the equity markets into the end of the month, find those cycle lows and go. And if we can get out of a swing low here, I'll probably add to the Dow early. So that's the plan for the US equities. If we can indeed get another push down, I think I'm going to add a VIX hedge and hold it through next week, since if we know the cycle lows are likely coming, right, then the VIX should get some sort of pop up. So I'm looking to play a counter trend bounce on the VIX. I will update you, of course, if I take this position. Apple still just about holding above its all-time high. All the while we're above the upward slope in blue and yellow, then we'll continue to push this, but I think this trend is starting to weaken, so we'll see how that goes. Tesla looks like it's going to do this blue squiggle, but from slightly higher up perhaps. So maybe we've started this and we can just adjust this over. Maybe we'll do something like this, right? Either way, going to continue to push this long all the while we're above this blue upward sloping support line. We'll probably readjust it depending on how low down this pullback comes. And if you're not in Tesla already, then a trade idea would be to draw a trend line and buy the breakout as and when that shows up, assuming it does at all. Still pushing this gold short, so haven't seen a big flush. Usually if you're going to get a big flush, it comes right at the end of the daily cycle, so we're getting kind of into that neighborhood for gold. Hopefully we can get one nice clean flush down here, and then we'll see what the market can give. Is this the trend line we're going to respect? Is this going to be the exit, something like this perhaps? Or maybe we could connect the top wick here. No, I don't really like that. I think we'll do the first one. So we'll use this as our indicator to flip long, break out of there, and I think we can go long gold. But for now, still expecting this drive down lower. I haven't showed silver on this channel for a while, but here's silver. So silver playing out just as we expected. So we've got our trend line. I think if we can break out of this trend line, this downward sloping blue one, we can add a long for silver. But I think likely it's got a little bit deeper to go. Probably wants to run the stops from under here. So that's why this is down here. We'll see if that can happen or not. Dollar seems to be in a downtrend, doesn't it? It seems to be rejected at resistance and on its way lower. So lose this big blue zone here in the box, and we're going to see risk ignite. But I would think, first of all, we got to find those cycle lows at the end of the month. Been a little while since I covered XRP, but XRP holding up reasonable. I don't think that this green squiggle is going to come to fruition now, so I'm going to get rid of this. We got a long just in case it didn't. So far, we have indeed got a breakout of this downward sloping red resistance line. We've come back up here. We've retested the breakout level, and we're back above this green zone. So all the while we're holding this green zone, then bullish structure is intact, and we'll be looking for higher numbers out of XRP. I've started to add crypto exposure back. So Ethereum broke out nicely yesterday. I added an Ethereum long back, as you can see here. So we've got a little bit more exposure. I'm going to cover Bitcoin in a minute. I'll come back to Bitcoin. Coinbase, I'm thinking that if we can break out this downward sloping blue resistance line, then I might add this position back as well. It will probably look something like this. Although I'm not in any rush to jump back into Coinbase as it stands. I'll explain my reasoning and logic for this in a minute. Still pushing both the MicroStrategy positions, and Riot right undeniably into downward sloping resistance here. So we've still got the initial position. If we can break out of this downward sloping blue resistance line, then I think I'll probably have to respect that breakout. I don't know, this stop is going to have to be quite wide, I would have thought, so I don't know how I'm going to do that just yet. But if we can break out of here, expect me to add a riot position. And if you're sat there thinking, wait a minute, Camel, aren't you deviating from plan? I thought you were going to wait for the 60-day cycle low. Yeah, I might, and I'll explain this reasoning when I get into Bitcoin in a second. Is this a double top for Marathon? Is this going to drop down into that cycle low and go? Quite possibly. Or are we just going to see a relentless lockout uptrend come out of Marathon? Either way, we're still holding the first position. We'll still continue to push this position, and I am still looking to add if we can get a significant pullback, or not even a significant pullback, but if we can get a pullback into that end of that month cycle low time frame, then we can entertain adding more Marathon back. So with all that said, let's get into Bitcoin, because I think I need to face a couple of possibilities here that I just didn't quite handle this trade the way I should have handled it. So as always, I'll show you every winning trade, every stop out, and I'll also show you every time I make a mistake. It has been a little while since I made an error or haven't had a very good read or anything like that. It's been a while, but this is the real world. This is real life trading, and sometimes you get the wrong read on a market. I think potentially I've misread this. So it's certainly still possible that we'll do what I said in yesterday's video and we'll get some kind of bull flag or whatever, drop into a cycle low and go. That's entirely on the table. If we're being completely objective here, this does not look like a breakout that's just going to roll over instantly into that cycle low, does it? This looks much more like the hallmark of a brand new 60-day cycle. So you might be thinking, how has this happened? And that's what I was thinking until yesterday, until I noticed Bob Lucas has labeled his cycles like this. So if you measure from here to here, what you have is a 52-day cycle. That's a bit short. I'm not entirely sure about that. And if you measure from here to here, we only have a 45-day cycle. So both of those fall outside of the 10% tolerance window. So the cycles are every 60-day, measured low to low, and we have a 10% tolerance, meaning plus or minus 6 days, of course. So both of these cycles fall significantly out of here, which is why I didn't like this count. I didn't even entertain this count until I saw Bob Lucas talking about it yesterday. But undeniably, this current price action is very reminiscent of what you would expect to see out of a cycle low, where you find that cycle low and then you push and explode higher. That's exactly what we've done at the moment. Now, of course, it's a market. Anything could happen. We could certainly roll over from here, come down into that cycle low, and that would be perfectly reasonable. We could also do something just like this, right, where we just chop around for a bit, find that cycle low again and go. So anything and everything is still on the table, but I think we can rule this one out. I still much prefer this count here, because from here to here, we have a perfect 60-day cycle inside the timing band. And from here to here, this will be a perfect 60-day cycle inside of the timing band, right? Inside of the 10% tolerance window. So we'll see what this can look like. Initially, when I put this cycle low here, I had it much higher up. It looked much more like this because I was expecting the price to come out of this cycle low, break here, and then do something like this into that cycle low, right? So we haven't done that. This technically, as I said yesterday, counts as a failed cycle because we breached the low that we set on the 60-day cycle. But unfortunately, in terms of the cycles, until more times elapse, we won't be able to say with confidence exactly where the cycle low is. For that reason, I'm still not adding to any Bitcoin positions, but given the entry yesterday for Ethereum, we were only just breaking out yesterday, so I thought let's add a position back here. So I've added Ethereum, like I said. We're still holding the add for the MicroStrategy position from all the way back at the last 60-day cycle low, assuming where I had it marked, assuming this was indeed the last 60-day cycle low. So we've still got that. Like I said, we could possibly think about breaking out for Coinbase and add in here. We'll get a tell, won't we? If we reject and roll over, then we could probably say with high confidence that the original count for Bitcoin, where this cycle low is here, will probably still end up forming into the end of the month. But unfortunately, I guess the mistake made here was we had our invalidation. We had a breakout above this downward sloping blue resistance line, and I was just choosing to say, no, I don't trust it. We've got to wait for the cycles, when really, if it breaks out, that should be the invalidation. So in hindsight, probably should have done this here. Probably should have got long on a breakout, but I did not foresee a major pump. I mean, we undid 3 months of downward price action in 3 candles here, and I didn't foresee that, which again, it goes to show, doesn't it? Because I'm one of the most bullish people out there, right? I'm one of only a very few amount of people calling for an all-time high this year. If we hop into this fractal chart and hit it on log, you know, most people Don't think this is a possibility. Everyone thinks we're going to do a 4-year cycle repeat. When we get up here, people are going to be saying, oh yeah, we're going to trend sideways into the halving and then go to $1 million. You know, I'm one of the biggest bulls out here. And I can remember being down at the FTX lows when everyone was saying, oh, we're going to go 10 or 12K. And I was saying, you don't understand. Like, Bitcoin is going to do Bitcoin things. It's going to pump straight up. I mean, I've recorded dozens of videos saying this. When we got in here, I said, you know, you don't understand. Bitcoin's just going to rally up here. And even now I'm talking about Bitcoin doing Bitcoin things once more. But it just goes to show, even as somebody as bullish as me, even as someone that's been calling for all-time highs this year, even as somebody that has consistently said, don't underestimate Bitcoin's ability to pump out of nowhere. Even though I've said that a bunch of times, I still managed to underestimate the pump that Bitcoin could achieve. So it just goes to show that trading never gets easy. It doesn't matter how many years of experience you've got. I've got 12 or 13 years doing this, and it goes to show, doesn't it? You can still mess up, you can still sleep on the market, and you can never take your eye off the ball. It never gets easier. You have to put in the work all the time. I don't think at the end of the day it's a big deal. Like I said, we're still holding plenty of positions. We've still got the core allocation, and we're slowly adding back. Like I said, we've added some Ethereum back. Managed to hold on to the MicroStrategy position, so happy days there. Riot possibly going to give an entry today, or if not, we'll learn something either way because we'll roll over into the end of the month, and then we can entertain Bitcoin as well, rolling over into the end of the month. So anything and everything is still very much on the table. But objectively speaking, we have broken out, and this is indeed the hallmark of a brand new cycle ahead of us. So perhaps we'll have to go to an alternate count. The stock market is still obeying its cycles, so happy days there. And I'm still very confident that once we get down into these cycle lows, we'll be able to come out swinging, as I've already said. So that's it from me. I hope you enjoyed today. I hope you found value. Still exercising patience and caution, particularly with the stock market. Not chasing this Bitcoin pump, although waiting for things to break out, such as Riot, as I said. We'll be keeping a keen eye to see if we get rejected or to pick up any subtle tells that this Bitcoin pump is indeed going to roll over or at least flag out into that 60-day cycle timeframe at the end of the month. But as I said, we also have to be open to the fact that the cycle low is already in and we have a new cycle upon us. It's not the end of the world if it is. And I'll just show you this really quickly. If I hop back into this fractal chart, right, even if the 60-day cycle low is already in, as you can see, this pump, whilst it is extended in the short term, whilst it's better to wait to see if we get some level of pullback or bull flag show up at some point, even if that's higher up, there's still potentially a monster move ahead of us. So overall, I'm not too worried about it. We're just going to try to deal with it as the market comes. In terms of tomorrow, I may or may not be able to get a video. I don't know if it's going to be a no vid from me tomorrow or if it's just going to be a late one. But I've got some family commitments that I've got to go through tomorrow. So expect either a late or no video tomorrow, but of course I will come back over the weekend and make sure that we do a deep dive TA ready for the week ahead. We should have learnt something about the cycles by the weekend's video as well. And next week, of course, will finally be in the week where we expect to see the cycle lows found for the stock market and for possibly for Bitcoin as well. So we finally got here, we finally got to the end of the month, and next week there should be plenty of opportunity and plenty of new positions to add and to take advantage of the coming moves. So if I don't see you tomorrow, have a wonderful weekend, and in the meantime, take care from me. All the best. Cheers. Bye.